Good morning. It's Mary Ellen McGonagle, and you're watching the MEM Edge Show. And this is the show where we put you in front of where the action is. And as always, it's with an eye toward how we can help you uncover stocks that are poised to outperform the broader markets. And certainly we're in a very unique period here in the markets. We'll go ahead and get into that as well as a number of other topics here today. First item we're going to do as usual is take a look at the current markets. You want to know what the conditions are and where things stand relative to the broader market, certainly before you put new money to work. That's going to be a very critical backdrop. And then from there, we're going to take a look at biotech stocks. And I'm terming this what's up with biotechs. And they are actually one of the best performers year to date, up 13% into Friday's close. We'll take a look and dig in there. Also looking at positive stocks within defensive groups. And we've certainly seen a very healthy rally into this new year, a lot of action going on. But I'm finding that it is helpful to still have some defense in your holdings in the event, certainly for days like today and going forward. So we'll take a look at some areas in those more defensive groups and where you can potentially hunt for candidates there. And then also focusing on leaders prior to the sharp sell-off that we experienced, certainly from that October to December period. We did see a lot of winning stocks from 2018 that really got hit with the broader markets. And that's an area that I'm certainly focused on, because should the markets turn here as they did on a week ago last Friday, should we see a continuation, you want to focus on those leadership names. They were leaders for sound reasons, and there's anticipation that they could go on to be leadership names into this year. And then lastly, earnings reports. We are starting earnings season. Certainly Citigroup came out with their report today. So provided we have time, I have a handful of stocks that are higher profile that we can take a look at their charts going into earnings this week. But let's go ahead and get started. I talked about taking a look at where we are in the broader markets. This first chart we're looking at is a daily chart of the S&P 500. This is into the close last Friday. And quite simply, what we are looking at is overlays that I've put on top of this price action, simple moving averages. This green line is your 10-day simple moving average. The red is your 50-day simple moving average. And the blue is the 200-day. And then on the top here, I have what's called the RSI. That's your relative strength indicator. You want this indicator not only to be heading upward or north, ideally positioned above this net dash neutral. So we are seeing that as a positive signal. Down below, I've put stochastics. This is another momentum type of indicator, but it can be really quite useful in identifying potential turns in broader markets as well as industry groupings. And I've pointed out a couple of items here. The stochastics, similarly, you want that to be heading north, also up above this 50, this net neutral here. And we are getting that positive signal. However, with the stochastics, when it gets up above this 80, hopefully you can see this over on the right-hand side, that's indicating that the index or the group that you may be viewing is in a position of what's called oversold. And the reason that that can be relevant is, go ahead and back here, historically, we certainly had that October correction in the broader markets. The markets did turn positive relative to these stochastics. Once we enter into that oversold position above that 80, there's always that possibility that the markets may at the very least pull back. And we did get that certainly into the latter part of November. And again, into the beginning of December, those stochastics just touching into that oversold position. So we currently are up above that 80, certainly not entirely surprising given the strength that we saw in the broader markets over the last 3 weeks. Really, we can see this is that market bottom here on the 24th. And then from there, we have certainly seen generally, by and large, an uptrend. From our work, we did get what's called a follow-through day a week ago from last Friday, and that's a signal that the downtrend has been reversed. We're currently in an uptrend. However, as you may note, I pointed out the 50-day simple moving average, this red line, simply because historically that can act as resistance. And again, I'm taking you back to these downtrend reversals. Certainly in November, we saw that the index, the S&P 500, did not quite reach that 50-day, but it certainly found resistance close. And then more recently in December, it just poked up above that 50-day simple moving average before falling rather sharply. So right now we are getting closer to that 50-day simple moving average with an eye toward the performance of the S&P. And this is true for many of the broader indices, the NASDAQ and the Russell 2000. They're all just coming up against this 50-day simple moving average. So it can be really quite important to pay attention to how the markets respond at this critical juncture. So that's your broader market picture. We are in an uptrend, but we certainly are getting close to that first possible area of resistance. Now, let's go ahead over to StockCharts.com. And what I'd like to do is another activity that we do on a regular basis here, where we overlay thumbnail 2-month snapshots of various indexes and industry groupings. And this is Candle Glance, accessible from that front page of your StockCharts interface. And it is initially populated by a number of various different indexes. I've gone ahead and modified that a bit so that in addition to getting each of the broader market indices, you're also getting industry groupings or sectors. XLY up here is your consumer discretionary, XLK is technology, XLV is healthcare, we have real estate, utilities, financials, consumer staples, and then those biotech stocks that I spoke to you about. Now I'm going to go ahead and update this to see where we stand today, because I've also overlaid on here an indicator, in this case the RSI, a relative strength indicator. I want to see where the strength currently is in these broader markets. You can, of course, add an indicator of your choice, but I do find this RSI to be quite helpful, again, as a snapshot view to ideally point out to you where we are seeing more in the way of money flows. So certainly the first item or the first index or ETF that you see here is this IBB, that's the Biotech, the NASDAQ Biotech iShares ETF, and it is positioned strength to weakness, this display. So biotech certainly are coming on really quite strongly. We are going to get into that in just a bit. And then the second from there is XLY, that's your consumer discretionary. We've had a unique period where consumer discretionaries were one of the first groups to go into a bear market territory in 2018, but they are roaring back to life, so to speak, on the heels of a relatively strong holiday sales shopping season. So it's very, very selective, however, but we are seeing a nice significant bounce into some of these discretionary areas. And then thirdly, here we have the Russell 2000, and that certainly was the best performer last week, up 4.24%. And this is another area. The Russell 2000 started faltering back in August. It was certainly ahead of the broader markets. Really sharp sell-off, well over 24% on that Russell. But this bounce here is really has been quite significant and certainly higher the relative outperformance relative to the S&P and other indexes. So it is good to see some of these small caps bouncing, whether it is an oversold bounce or it has legs remains to be seen. We can see it's right up here at that 50-day, that red line, 50-day simple moving average. Ideally, a break above that would be viewed as bullish. We talked about looking at defensive areas in the broader markets, and this is XLRE, that real estate sector. And this is where there are a number of REITs. These are higher yielding stocks And these REITs are looking attractive. They had a good week last week, so we will dig into there as a possible area for you to play a little bit of defense in this market, given the advance that we've seen so far. So very quickly, I'll just scale you down to the weakest areas, and you can see that they are consumer staple and utilities. And this is another area that is standard as far as being generally defensive. But over the last week, certainly, we've seen a lot in the way of money flows into these high growth stocks. And that is leaving some of these defensive areas behind. But I'll tell you, there are still stocks in these groupings that are also offering you a yield and that are holding up well. Technology, very interestingly, that it's down here in this lower quartile. And I will tell you that has everything to do with how XLK is positioned. They had a restructuring of the XLK last fall, and so you have two of the top holdings in the technology sector accounting for 36% of that index. The two of them are Apple and Microsoft, and these two stocks, very well known, are really faltering a bit. They're underperforming the broader markets. So that is what is keeping this XLK down, because I will tell you there are real pockets of strength within technology that are not being shown, if you will, given the lackluster performance in XLK. And this is something that my work with MEM Edge, I do a lot. We've had a number of stocks have really explosive weeks last week, all within that technology. So let's go ahead. I talked about taking a look at biotech, and so I'll give you a little bit in the way of information as it relates to these biotech stocks. And the first is that biotech stocks really underperformed. What we are looking at here is a monthly chart. I'm using IBB, that's the NASDAQ Biotechnology ETF. And so each bar here is representing 1 month of trading activity, a little bit different than you might normally be used to looking at. But take a look at this 2018 performance. And in the month of December alone, IBB dropped 20%. But overall, you can see that it has been a generally net either market performer or, given last year's action, an underperformer. But what I did want to point out from here is the fact that the IBB year to date is up 13% again into Friday's close, and that is the best start that these biotech stocks have had going back to 2012. So the reason I'm pulling up this monthly chart is let's go ahead and take a look at the action in the biotech stocks in 2012, and I'm taking you back to the beginning of that year, and we can see that the index was trading at about 30. Take a look at this multi-year advance where this index got up as high as 130. So a very significant advance. I'm not saying that we will see that advance from here, but certainly worth noting, particularly given some of the dynamics that are taking place within these biotech stocks. So let's go ahead and dig into that as far as what is driving some of these biotech stocks. And the first thing I will point to you or point out to you is there's been a lot of merger activity. And within the biotech space, what we're seeing is a lot of large pharmaceutical stocks that are looking for growth. They're not able to sustain their growth organically. Perhaps they have drugs that are coming off patent. They have other competitors. So they are looking to acquire outside firms so that they can continue growing. So let's take a look. One of the first M&A activities started actually back in August of 2017. Gilead, very well-known biotech stock. We can just take a quick peek. GILD is the ticker symbol. And they bought Kite Pharmaceuticals, and that was a very, very big purchase. We're looking at Gilead on the weekly, and Kite is in that oncology space, cancer drugs. Gilead is not yet seeing the benefits of that purchase. We can see it's bouncing around here. but that was one of the first. And then in January of last year, Celgene bought Juno, which is another cancer gene therapy company. Both of those were explosive stocks, really forefront at their work. And so from there, this year, we're continuing to see these big pharmas buying these other organizations, again, with an eye toward growth. So in the beginning of this year, Bristol Myers purchased Celgene. So this is Bristol Myers. And oftentimes the acquirer will drop while the company being purchased will go up in price. So that was Bristol Myers. Here's Celgene. We can see this huge gap up here on that purchase, and the stock is advancing subsequent to that. Now, interestingly, Celgene had purchased Juno back in January of last year. So by Bristol Myers purchasing Celgene, they were also buying Juno. These names might not mean much to you, but I'll tell you that they are really masters within that oncology cancer gene therapy space. But let's take a look at another merger. Eli Lilly last week announced their purchase of Loxo Oncology, LOXO, and we can see this big gap up on the news with LOXO. So really that's what's driving a lot of the activity and certainly the interest in these biotech stocks. Let's take a look at another one. This is AMRN, Amarin. This stock gapped up quite a bit, and this is last week, and this was actually on takeover rumor. There's rumor that Pfizer is looking at Amarin. It could be it's a buyout rumor, but it is driving these big moves. The stock was up over 40% at one point in time. It is pulling back a little bit. So we can see that some of these biotechs are really having some big moves. Also, what occurred last week was a very, very big JP Morgan healthcare conference. And this is an annual event where these companies come out with their big announcements. And at that conference, a number of these large pharmas spoke to institutional investors, and they reiterated their continued interest in purchasing some of these other firms that can help them grow. And as of, for instance, Eli Lilly did come out, despite their recent purchase, they plan on the prowl for other buyouts. And then let's go ahead and take a look at some of the other big movers within the biotech space last week. And this is a company, I'm going to pull up SAGE. For those of you not familiar, there are over 550 stocks within the biotech grouping. So it can be really quite difficult to get your arms around that many stocks to really keep your eye on top of the winners and the movers. From that, I would urge you to potentially select an ETF as a way to play. But for those of you that like to dig in, get a little bit more involved in individual stocks, this is Sage Therapeutics, SAGE. This stock had a big gap up. They presented at that conference I spoke about, and the company reported positive late-stage data on postpartum depression. And so they actually spiked 62% intraday. But what I wanted to show you is how you can stay on top of a stock. If it were to surge, let's say 62%, we're seeing big moves in cannabis-related stocks and other areas. Ideally, what you want to initially do is pull up that daily price chart. That's what we're looking at here. And we can see this is that big gap up, and the stock gapped up above that 50, up above that 200-day simple moving average. But what really is going to provide you with some keen insight is to drill down into an intraday chart. I'm going to pull up a 1-hour price chart of SAGE, again, more with an eye for how you might handle a stock once it's had this big gap up. So here we are taking a look at the late stage positive news for Sage, gapped up, got up here again as much as over 60%. But what we want to key in on here is that RSI up here on the top. And we can see the RSI got up above this 70. That's indicating that the stock is overbought. It's with an eye toward at some point in time, at the very least, a pullback. From here, there are other indicators that you can utilize to help you. And that would be these simple moving averages. So let me go ahead and get you an intraday chart, because I have different simple moving averages on these intraday charts. And you can see that the stock's price did in fact break down below these simple moving averages. And I'm trying to go ahead and give you a better view of that right side there. And we can see the breakdown below these simple moving averages. Your MACD is crossing downward into negative territory after coming out of that overbought position. So one other way, quickly, before we move on, I was going to show you with these biotechs as a way. You can go into StockCharts initial interface. From there, go ahead and drill down to the sector summary. And from here, you're going to get a view. This is a daily. This is telling you the performance today on a relative basis, what is up and what is not doing so well. But for today, we're going to drill into healthcare, into that sector. And let's go ahead and take a look at biotechnology. And I talked about just how many stocks are in this group, but one of the ways that you can potentially get a little bit more tuned into where the strength might be is this scooter, SCTR. This is a technically driven ranking system, but it's really quite powerful. And so what you can see from here, I can go ahead and hover over the ticker symbol, and it's going to provide me with the performance. And you can see quite simply that these are going to be your better performers up here at the forefront. And from my work, strength does beget strength. So this is an ideal starting ground. Some of these smaller names might bounce around a bit. You're already in a risky group. A lot of these companies don't quite have earnings yet. So ideally what you can do from here is go ahead and drill down and take a look for some of these larger cap within the biotechs. And Celgene, we talked about that company being bought out. So let's go ahead and take a look at REGN, Regeneron. This certainly is a bigger name within this space, and take a look at the strength here. A lot of my work, I'm on the prowl for stocks that certainly have that positive RSI. Your MACD is positive crossover and positive territory. We're now looking at a daily price chart. This is a lot of that volatility last year, that October correction into December. But take a look how this stock is poised to break out of this very long 4-month base. And ideally, if it does break out to new highs, if you get volume, very, very constructive for this REGN, Regeneron. So that's a quick overview of how you can go ahead and drill down, take a look at some of those stocks. Now, we talked about taking a look at areas that could be potential defensive plays in this broader market. So let's go ahead back to the StockCharts interface. And we want to go ahead and get back to that sector summary. And then from here, we can take a quick peek at some of these areas that are generally viewed as defensive. So I'm going to take us to this real estate sector fund. It was one of the top performers, up over 4% last week. And a lot of that had to do with these REITs. And from here, you really can drill down into any given area. I tend to like the industrial and office REITs. Diversified REITs are equally, actually, really any of these areas. So if we go ahead and drill down into these industrial REITs, and then again from here, using that scooter, SCTR, we can really get your arms around those that are really outperforming the broader markets. And so from here, you can certainly take a look at some of these REITs that are performing quite well. And again, from my work, I do tend to favor some of these that are larger cap. It doesn't mean that the smaller or mid aren't going to serve you, but Duke Realty, DRE, could be a very prime example. Now, this one is still recovering from a very steep sell-off. It's not a name that I would favor because it is still finding resistance potentially at this upward trending 200-day blue line simple moving average. We have the other indicators flashing positively, but this particular stock would not be as interesting to me. But some of these others, this is a stock from the M-Edge Suggested Holdings List, CTRE Care Trust. It yields 4.5%. Take a look at this nice constructive move. And last week it was up quite a bit, over 5%, but it's really behaving in quite an orderly fashion. And again, you're getting that nice dividend yield. Your RSI is positive. Your MACD had that positive crossover and is now positive as well. So this would be an even better example of a REIT stock, which is viewed as generally defensive and a way for you to kind of balance out if you've gotten into these markets and are involved in some of those high growth stocks that were winners last year. And then from there, let's go ahead, because we can certainly take a look at how you can get in front of some of those stocks that were big winners last year with an eye toward those continuing to outpace this year. So one of the areas I would certainly take you to initially would be consumer discretionary. I talked about that area. It was certainly had a really sweet spot last year, certainly from March into the summer months, and there were sound reasons. A lot of these companies had very strong earnings, so we can take a look at the sub-industry groupings within the discretionary sector, and then quite simply from there, clothing and accessories. We can just go ahead and click on to that. This Lululemon is a stock actually that I put onto our suggested holdings list with MEM Research a little over a week ago, and it's enjoying certainly a nice move. But here again, if we go ahead and sort this by SCTR, generally speaking, the names up here at the forefront, let's just go ahead to Lululemon as an example, and then I do want to move on quickly to one other area. But take a look at LULU. This is a daily price chart. Each of these gaps up. This is in the beginning of June, in September. These are all earnings related, super strong earnings. The stock was a big winner from that March into October period. The stock advanced very significantly. So there is an eye toward that advance beginning, and the management did come out today. They guided higher for this year. Of course, the street likes that. So these are the kind of stocks that I'm going to be on the prowl for. These big winners from last year sold off only because of the broader markets, not because of deteriorating fundamentals. And then they are re-emerging here of late. I talked about a couple of companies that are reporting earnings, and I'm only going to have time to get to a couple of them, but that's okay because it's not a big earnings week this week. We had Citigroup come out today. I was going to point out another financial that is due to report on the 16th, so that's on Wednesday. This is BlackRock. BLK is the ticker symbol. They are the largest asset management firm. And so a couple of dynamics I wanted to point out to you going into earnings. This is a company that analysts are revising their earnings estimates down. They have a forecast of -2% for 2019. A lot of that has to do with outflows of money. Their ETF outflows, they've seen the most in new money, a fallout as far as new assets, the most since 2018. And we all know that that was a very severe period for financials. So they are trying to stem their ETF losses. Also, a lot of the volatility in the markets is keeping investors away. Individual investors are steering away. Pardon me. So this company is, again, reducing estimates going into their earnings report, which is generally not a positive signal. And then they did announce today that they're going to be cutting 500 employees, all with an eye toward this reduced client base that they're seeing. So this is a stock that generally I would not be a buyer going into earnings. Generally I wouldn't be, but with this outlook and prognosis being weak. So I will go ahead and leave it at that. And those of you in the markets, happy trading this week. Take care.